All right, so I'm not sure this episode will be the most fun. Morgan and I were just laughing about whether or not entity creation is really exciting, but it is very necessary.
Exactly.
We all need one, right? Welcome to Managed Chaos Podcast, where we give you the startup business rundown in less time than it takes for you to get to work. I'm Katrina Purcell, and today we are joined by an amazing guest, Morgan Ranstrom, who is joining us to walk through the nitty-gritty of building your business. So Morgan, we thank you for coming on to talk to us about the very important topics that maybe sometimes get pushed under the rug. Morgan has his CFA, his CFP, and he specializes in helping entrepreneurs maximize both business value and personal wealth. He grew up in a family business and he later started his own ventures. Morgan really understands the challenges that business owners face when scaling and exiting their businesses. He has built a virtual family office approach specifically for you, entrepreneurs, helping you to navigate entity formation, cash flow optimization, taxes, exit planning, and all the other complexities and maybe not as many fun topics of business ownership. He is also the author of Money with Purpose, which I absolutely love and hopefully we'll have time to chat about. So he brings his perspective as both a financial expert and someone who's lived the entrepreneurial journey. Morgan, thank you so much for joining us today.
Thanks, Katrina. This is really fun. And we're going to try to make this a fun conversation, right?
It's going to be so fun. We're going to do a count of all of the laughs that we have as we go through talking. We're going to start off with the real humdinger, though. Entrepreneurs struggle. I actually had a really hard time with this when I launched my business. I actually made a mistake and had to go back and fix things, which was very costly from maybe not as much from a money standpoint, but from a time standpoint. They struggle with choosing the right business entity structure early on. So what are the most common formation mistakes that you see, and how do those end up impacting not only business growth, but also personal finances? And in my case, it was definitely more the latter.
Yeah, that's a really good question. I think the first mistake is just not choosing in the first place.
The art of avoidance?
The art of avoidance, or and I wouldn't even call it a mistake, Katrina. Like, sometimes you just have to start and you'll figure it out down the road. And yeah, there might be you pay a little extra in taxes or whatever it is. You can fix it, right? I don't think you should be hard on yourself. I don't think other business owners out there should be hard on themselves, because it's really just what's the right step now. That said, the entity formation is something that can be avoided. I think it's natural to just want to start your business. You've got a really fun idea you want to execute. Also, all of these things are hard, right? And there's one more hard thing, which is, hey, you probably have to go talk to an attorney and a tax professional to figure out what the right entity is for you and your goals. That is, once again, like the easy thing to push down the road. And so I would say, like, the first mistake is just not considering it in the first place. And then number two is kind of a corollary of that, where I think it's really easy, or maybe this is a better way of saying it. A couple of years ago, I was just getting spammed on Instagram with like form an S Corp. I think at the time, I don't know why it was
They targeted you. They were like, you need an S Corp.
I don't know why.
I don't get targeted those kinds of ads.
Right. Yeah. It was like, it was some like, looked like a tech company, although I know that's not a tech company. It's some sort of professional services firm, but like, it was like, form an S Corp, you'll save so much in taxes. And it was kind of like, well, you know nothing about me or my businesses, right? So like the second one is just kind of going with, I'm going to put it like this, like some influencer suggestion that you see on Instagram or X or YouTube or whatever it is. You might be listening to this conversation and have some takeaways and be like, oh,
Morgan said,
which, by the way, this is not tax, legal, financial advice. Let's be clear about that too. And then you go execute on that idea. And I've seen one situation, I won't get into specifics, where someone filed an S Corp, filed as an S Corp, didn't realize that is a separate tax return that needs filing as an entity, a separate entity. And they just totally botched the whole thing, which that then had to be cleaned up by professionals down the road with like refiling, and taxes had to kind of there was extra taxes that had to be paid and administrative costs. So that can be a huge mistake too. So I would say, like, that's kind of thing is you get this idea in your head of like, oh, I need the S Corp or I need a C Corp or whatever it is. because of a non-specific suggestion, and it just might not be relevant to your unique situation. And so I would like go get custom advice for your custom situation.
It is worth paying for the advice, in my opinion. So I sort of did the opposite. I said, oh, I'm just going to do a DBA. It's no big deal. And then when I finally met with an accountant, a CPA, she was like, this is not tax advantaged for you. You really need to be an S Corp. You need to get an LLC. You need to do all these things. And I was like, I was just trying to get started, and I had to spend a whole, and of course the bank couldn't change the names. You have to create all new accounts. You have to, it's just.
Yeah.
And so I fell prey to exactly what you said. I listened to someone who didn't have the specifics of what my business was, and didn't understand what my projections were for the first year, didn't understand how much money I was planning on making, or even already had contracts for. And so gave advice based off of what they had done, which it was.
I think just like those key words that you just said, though, it's like you had projections for that year. You had like contracts in place. Like those are the things that will give you the information of like, yeah, DBA, you're kind of a disregarded entity. It's going to be on your Schedule C of your personal tax return versus S Corp. If you have no idea what that's going to be, I would be like, wait on the S Corp, because that's going to be, a lot. There's an administrative burden. It's going to be costly to set up. It's going to be time intensive to set up. Now you got to do payroll, all that fun stuff.
Yeah. So, I mean, that was the fun part. I didn't get paid for the first like 3 months, right? Because we had to get everything all set up. And by the time I got, my payroll was Gusto.
Of course.
Shout out to them. They're super easy to use. But yeah, I pay myself. I'm a W-2 employee.
Yeah.
Of my own company.
Which is pretty cool, right?
It's pretty cool. It's fun. So you've really been able, from a cash flow management perspective, right? It looks very different for what I guess we'll call a lifestyle business versus a growth-oriented venture. And this was something that until I became an entrepreneur, I actually didn't really understand. When I first launched my company, one of my friends said, oh, is it a lifestyle business? And I was like, well, I'm not doing like fitness and whatever. And he goes, that's not what I mean. And I thought, what is it? So how should entrepreneurs sort of align that cash flow strategy with longer term business goals? And maybe when you're first starting, you don't know. It is just lifestyle. You're quitting your full-time job because you want something that fits more within your schedule. And then you shift to wanting it to grow. How do you advise, or what kind of things should people consider?
Yeah. So I think it's all going to come back to purpose for me. So I think when we think of like startups or entrepreneurs, we automatically go to the like Silicon Valley archetype that's just been like pandered to us, of like a 19-year-old, usually male person who's going to like drop out of school and grow this like multi-billion-dollar entity. And like, that is very rare. Entrepreneurs come in all shapes and sizes. I think I saw a stat, I might be wrong on this, but I think I saw a stat that's like most businesses are started by individuals 40 plus, which makes sense because I turned 40 pretty quickly. So I'm going to say we have more experience. We have we have workplace knowledge and all that stuff. All to say, whether you're younger or older than that, or this or that, or experienced or inexperienced, like, it is all across the board of who's starting businesses. And like I said, most of us aren't going to start the like unicorn multi-billion-dollar enterprise. You might, don't let me stop you from that, but that's rare. So within that, like, lifestyle versus, something that's going to scale, I think is like an important differentiation. If you're looking to like scale, bring on investors, you're going to need capital, whether that's like bank financing or venture capital, or you're going to need to bring on, equity from like silent investors and stuff like that. Like that's going to determine the type of entity you set up. And, probably a C Corp, could be some sort of partnership, but probably a C Corp is what we're talking about there. But that's like rare, I would say, and much more common is the, I think the situations, Katrina, you were just talking about, where it's like you start a business and you're more differentiating between like, is it S Corp, or can I just handle this as like a LLC on my personal return, a single member LLC or whatnot, or a partnership. I've got a few partners or something like that, and we're going to go in together. And here's the partnership stakes. The next one would be like thinking about retirement. Are you going to sell this thing? Most businesses don't sell. Okay. So like they probably should be managed for cash flow. And then you got to turn that cash flow into your own retirement savings because you're not going to count on the sale of the business. If you think of like a consulting firm, for example, that's like sometimes those can sell, but usually not, or there can be some sort of internal transfer. It's usually not something that's going to like dramatically impact your balance sheet at the end. It's just like there might be some sort of transition. Right. And
Right.
so most businesses are kind of set up, they're kind of set up to be jobs for ourselves. And so that's how like I think that changes how you think about things. And then the final thing is I think every business is a lifestyle business. Like if it's not tied to purpose, what are we doing
Doing.
here? Yeah. Yeah. It's like, do you want more time? If you have kids, do you want to pick them up at the bus stop every day? Like that's pretty cool.
Mm-hmm.
Do you want time to travel, which is something that we see a lot of like, I'm going to take on this project and I can work from anywhere. Like that's
Right.
fantastic. And then don't create something that gets in the way of that. Like be
Mm-hmm.
really conscious of that purpose the whole way through.
Yeah, I think that to me, that was actually in the first year sort of the hardest thing to do because you are so conditioned to still want to do that 9 to 5 and still have the grind and still do all these things. And you're like, wait a minute, I started my own business so that I didn't have to do this anymore.
You
And
don't
now
have to
I'm
do that. Yeah.
forcing myself to do this. I did last year. So the first year of the business, I didn't, but last year I set up a SEP IRA to start, investing in my own retirement
Yeah.
as part of, right, business profits. And that was a whole experience that I really every day appreciate my CPA and her team and what they bring to my,
Yeah.
they're worth their weight in gold, in my opinion, because that
Yeah.
was not my zone of genius. And it is definitely an area where they've been able to push me out of my comfort zone in certain places, but also just kind of recommend things that I didn't even know necessarily existed. So I think having strong team around you as you think about how you want to leverage your business or how you want it to unfold is really important.
Yeah, I mean, shout out to CPAs, and there's really good EAs, so enrolled agents is another professional that can help you with taxes. Because yeah, it's like you're gonna want 1 to 2 tax projections every year. It gets complicated. There's the initial decisions around entity formation. There's a lot of tax planning that can come into play. What can you write off? What can't you? I think people are often confused about that. And to kind of avoid the stress of just managing and paying the taxes, they're looking for a magic pill, which usually doesn't exist. For most businesses, like the best way to lower income and reduce taxes is some sort of saving strategy like a SEP IRA. So we love SEP IRAs. I really like individual 401ks too. They're a little more complicated, but there's a couple unique things you can do there, like a mega backdoor Roth IRA or
Yeah,
something.
I was going to say we had quite the conversation back and forth about which one to do, and
Yeah.
I am not sure, and I cannot remember the exact thing that landed us on the SEP IRA, but that's where
Way easier, like way
and probably
easier.
that's probably part of
So
it.
probably a good choice. Yeah.
That's probably part of it. So you've seen entrepreneurship from multiple angles, right? Family business,
Mhm.
startups, now you're advising business owners. What is that key conversation that you feel that businesses should have when they're getting started, but they don't? So what are they avoiding?
I think like the main thing is seeing the end in the beginning.
Mm,
So I keep coming back to purpose and what are you trying to achieve? And, I think it's so easy to just get lost in kind of the day-to-day grind or excitement of what you're working on at the moment. But if we can zoom out and see the forest for the trees, you kind of see this within the construct of your entire life. And like, how long is this venture going to be? If this is like I had a paid newsletter on Substack for a little bit that I was writing to other financial advisors. That was something that I probably could have grown and scaled, but that just was never my intention. I was working through some things and I was like, I could probably make some money along the way working through these things.
yep.
I did it and it ran its course and I was a little burnt out. And, I was like, I don't want to hire someone else to do this, like that wasn't the purpose of what I was trying to do. And some people said
Mm-hmm.
I was stupid and maybe I was like, but it's okay to leave money on the table, I guess is what I'm trying to get to. It's like, you don't have to maximize everything. Uh, and that was also like reason for me not to overcomplicate that business. For example, it was never the main thing. It was just a side gig. And I knew it would run its course at some point. So it's like seeing the end in the beginning. Is this a 5-year thing? You're going to transition from corporate life to consult for 2 to 3 years, but then you're like really open to the next like corporate gig or, running a nonprofit or like whatever that is. Like you're open to the next thing. In that case, it's like you're not starting a C Corp. You might not even have to want to bother with like an S Corp or something like that. And it's just like, if you end up making lower money than you thought, that's
It's
okay.
okay.
Pay a little extra taxes, but it's like it's going to run its course.
Right.
And on the flip side, like if this is something that's going to last you to retirement, there may be an exit. I think that's going to, impact how you run that business, how you start that business, the decisions you're making. Do you make this hire or not? Do you contract this or not? All those sorts of things.
Right. And I think also being open to it sort of evolving. So for me, I'm coming up on the 2-year anniversary, and it's sort of thinking through redoing the website and redoing the offerings now that I'm more settled and have a better vision of what it looks like, right? Because it's been 2 years and you start to feel better and more secure in how things have evolved and where you want to see them go. And so understanding that, what you set up in the beginning might not necessarily be what you still have in 2 years, but setting it up in a way that it can evolve as opposed to being stuck or siloed into one thing is important.
Yeah, absolutely. And we change. Like, so the businesses change because we change and we learn things and we see new ideas. I think like partnerships, just like getting to the name of your podcast, Manage Chaos, right?
Yeah.
So it's like partnerships. When you bring on other people, that is a form of chaos. It can be a beautiful chaos, but you've now like created something that wouldn't have existed without that collaboration.
Yeah.
I work with they're like medical professionals, let's say, and they just partnered. One's like super type A. The other one's kind of like visionary dreamer.
It always works out.
Yeah, right. Like there's gonna be tension there, and conflict, good conflict. I don't mean that in a bad way. I mean that in a very positive way. And I'll just say that like the type A person probably doesn't. He likes the practice and he kind of wants it to be a little cleaner. The other one's going to like push to like maybe buy a new practice or something like that, but they will do it together in a much better way because of that collaboration. All to say, it's like, it's going to change. The end is going to change because of that collaboration.
Exactly. Well, I hope that this has actually been a very fun and uplifting episode about entity creation and all of the things that you should think about when you're starting your...
You stayed away from the wonkiness.
Exactly. We made it exciting. Morgan, how can people find you if they want to find you?
Yeah, we got lots of fun stuff at morganranstrom.com. So that's my first and last name, morganranstrom.com. Also on YouTube, it's Morgan on Purpose. It'd be the same on Instagram. And the other social media.
And we will link all of that in the show notes. Thank you so much for joining us on this episode of Manage Chaos Podcast. Please subscribe on YouTube. We're trying to hit a really audacious number of subscribers this year. And we will see you on the next episode of Manage Chaos Podcast.